Not sure if it's actually working yet. Okay, I'm not sure if y'all can hear me or see me, but bear with me 1 second. All right, it should be showing me. I apologize. I had a delay that I couldn't overcome. Yeah, okay. I hear myself jawboning now. So we are looking at FOMC. I will be doing this each month this year, by the way, so that way it's not like a one-trick pony. I want to show you why I don't like to trade these days, even though you saw me get lucky this morning. I'm just worrying about providing something to keep you guys held at bay. So I'm looking at the 40.91 and a quarter level. It's too smooth. Now, do we run through that, reject it, and trade back lower? That I don't know. Like, I really don't know. So because I don't know that, I want to wait and see how we deliver at 2 o'clock. That first move usually is like not the real move. And then at 2:30, the real move comes in. So it's kind of like a tsunami type effect. So we're more or less just observing. Anything noteworthy, I'll bring to your attention. But right now I'm watching that 40.91.25. I think that's a little too suspect, too smooth. A lot of action hounds out there like to trade this and gamble. Not me. All right, just a couple more seconds, and then you'll see all kinds of volatility come in. And here we go. All right, so sell side's been attacked first. Now, what I'm looking at here, and I find a little bit interesting, is how we're starting the show off right now with this high wasn't taken out. And this high actually is the consequent encroachment of the new week opening gap. So we didn't go above it. We left relative equal highs here. So here and 40.91 and a quarter buy side, I'm watching how they engage that. Nothing in here is tradable. All we're doing is observing where liquidity is and how the market wants to reach for it and what it does once it does so. So let's see if it wants to swipe above 40.82 and 40.92. Don't push any buttons, folks. I'm not enticing you to do anything. If I felt good about it and strongly about it, I'd be telling you, don't touch it. Now, can you trade it after like 2:45 New York local time? I believe you can, but I don't think anyone should be doing anything with it right now. And that's a general rule. I'm not just doing it just for today. I teach my students don't touch it at all, in fact, but it would be entirely misleading if I said I didn't ever trade it after 2:45. And there's examples of me having done so. But I don't know what it's going to do beforehand. And because of that, that's a gamble. It's not even 50-50 in my opinion. I'm more likely to be wrong. That's how I treat it. So it's a matter of just let the market do what it's going to do. And after the 2:30 portion, because it's a two-stage event for FOMC. This move here, and then the real move at 2:30. And you'll most likely see that in about 27 minutes. I'm going to hang with you guys until around 3 o'clock, and then I'm going to get off here. All right, so far we've tried to go lower once more, back inside the range prior to 2 o'clock. Taking out sell side here. I'm watching this level, and again the larger pool of liquidity up here. What's the benefit of doing this, ICT, if you're not going to trade it? Well, you have to understand what the market's showing you. What you're observing is how the market seeks liquidity. And right now there isn't anything in terms of inefficiency except for this portion of price action up here. This is buy side. Show me when to buy and sell. And it's a whole lot more things you have to understand before you do that. So we've had a bit of, like that, 20, 25 handles or so from the high here, and really no follow through yet. Why anybody wants to trade right now is beyond me. It's just a gamble. These levels are actually a smaller PD array that's not important anymore. So I'm just going to use the levels, or lines rather, and annotate the inefficiency. So what I'm observing in all of this is we have buy side resting above this high and this high. So these are relatively equal highs. So that's too smooth in my opinion, much like the highs at 41.91 and a quarter. Apart from that, there is no inefficiencies except for this small little area here, which is what I just annotated with these two lines. So above this level here, if it reaches for buy side, I'm not saying we are. I'm just saying I'm observing it just like you. I'm studying it because I want to try to get some insight leading up to the 2:30, and then at 2:30, between 2:30 and 2:45, I might be able to see something that would be a case study. Let's say I don't want to call it a trade because it's going to entice you all. Okay, I'm getting my orders ready to put in for a live trade. Don't do that. But I'm trying to build the case for what would be in play at 230. These relative equal highs, which is above that is buy side liquidity. But how far above that can we go? Well, I think if it goes above that, it's likely to go to 40.92 and thereabouts, just to clear up the initial high. We have buy side here, which if it's going to go here, it's going to bump the 40.92 level. But above these highs here, how far can it go? Well, you can go to consequent encroachment, which is the midpoint of this low to that high. Right there's consequent encroachment I just mentioned. So that buy side is now purged. So I'll keep the level there just for annotation purposes. But it went right up into the midpoint where I just outlined right there. So I don't think that is enough, to justify, especially for an event like FOMC. So we're going to see, does it have a lot of energy to reach through the high end of this fair value gap? And this fair value gap is a SIBI, sell side imbalance, buy side inefficiency. I know it's a mouthful. It means just simply that this candle was a delivery on the downside, so it's offering sell side. So it's sell side imbalance, buy side inefficiency. It's inefficient in its ability to offer anything except for downside. So the way it's repriced to, which is about to happen here, it'll go up and touch the top of that level here. Well, there you go. Now that's repriced. That's not rebalanced. That's not rebalanced at all. It needs to leave this range, try to go to it here and go lower, or go above it, come back down, and then rally. So the only thing it's done now is just repriced back to this. It's not balanced. Okay, as much as it may seem like it is, it's not. So I'm looking at this high here now, where retail traders have bet the farm on this going lower, and hey, they may be right today, but my mindset is always attack them. So buy side's above here. Now I'd like to see it just aggressively run right over top this high and dig into this, and then right above into 40.92. The reason why I say that is because look how many times the market has traded below old lows. These lows, we traded through it here. This low was traded to it here. This low was traded through here and rejected, leaving this high and that high, which is what I had here lined up for buy side. We reached into that. I mentioned that we would go into this SIBI. This candle's low, this candle's high. So midpoint of that's consequent encouragement. You saw it deliver there and then deliver to the high end of it now. Now watch what we see here. We've completely went above, and now we're leaving this range. Now it becomes noteworthy because if we have a willingness to trade away from it and come back onto it one more time, and it shows a willingness to not go back inside these two blue lines, that would be, in my opinion, but it's too early because 230 is the real move. That would be something that I would be interested in seeing if it could trade lower. I'm not suggesting that here. I'm just thinking out loud over top of the charts, and this is what we're going to be doing mostly 2 times a week this year. I'm going to read the price. I'll tell you what I think is going to happen, why it should happen, why it shouldn't do certain things. But do not take what I'm saying today as an invitation for you to be pushing the button either today or in the future FOMC. If I was confident that I was going to be able to go in here and just navigate without having any harm to me, I would simply just be doing it. I wouldn't be here talking about it over the chart with you. I'd be in here pushing the button, recording it, and doing the whole business like you usually see me do. I still favor the buy side here. I think that's where we're going to rip into that. Now, what I want to see is exactly how we trade after this high and 40.92 is traded to. Do we explode through it and trade into the 41s? 4100 rather. I don't know, but I just know right now I'm observing this area right here. It looks just too clean. And it's this high here that had this high. And then we had all these attempts to go lower. Notice that? This low was pierced here. This low was pierced here. And then this low was pierced here at the 2 o'clock driver when it first, the first part of FOMC. Came back up to our pool liquidity we were looking for. Consequent encroachment, full repricing to the inefficiency here. And we've yet to go above this high. To me, any kind of staggering and I guess stalling shouldn't be trusted. I wouldn't trust any of it. And that's really the characteristic of this day, why I tell my students not to trade it. Because obviously if you're learning from me, chances are you're probably unseasoned as a trader and you're not really versed in terms of what it is you should be doing. And you're more inclined to want to push the button to get in here and to see what happens. This is a day where you don't want to push the button to see what happens because you'll find that it's extremely painful and it can move real quick against you and your stop loss might not be all that much help to you. So that's the reason why I tell my students not to trade it. I get wise guys all the time say, oh, look at this trade I made. And ICT says, don't trade on that day, but here I am, I'm doing it. Okay, well, why didn't you do it live? There are always those kinds of guys. And that to me is irresponsible for a mentor, for anyone to come out and encourage new traders, new students. They have not proven themselves to be disciplined to engage in an environment like this. It's equivalent to trading like on non-farm payroll. In about 15 more minutes, the real move will begin. And it should be starkly different than what we've seen so far since 2 o'clock. Usually the second part that happens at 2:30, that's the one that brings the real motion. I know some of you are looking at that little pink box over here, remembering what I showed in last night's review. How did you know that was not a bearish breaker? I'll teach you. Just let me worry about this for right now. He's in my head. Here, I'll take it off the screen. That way it doesn't entice you. All right, so see this small little gap in here? Right there. So this candle's high. This candle's low. We traded down into that. That right there, technically, on any other event or another day, not a FOMC day, I would use that as a institutional order flow entry drill and expect it to rally up and attack a buy side liquidity or an imbalance above price. But that right there, you're going to see a whole lot of that kind of stuff when I'm doing live tape reading with you. I'll say, okay, watch how the market responds and respects this specific area here. And you also will learn when you see me doing pyramiding, like when I'm buying, if I'm going long in something, and I'll do a core entry position that I'll start to trade with. Usually it's like 6 contracts. And then I'll go down to 3 on the second one, and I'll just do 1. Or if I'm really aggressive, I'll go 6, 4, 2, 1. And I'll build it up like that. You'll start seeing why I'm doing the pyramid entries where I'm doing, because it looks sometimes, especially if you're new, if you never really spent any time looking at what I'm doing or teaching, it'll look like it's just chasing price. When I'm buying, when the market's going against my trade direction, but it's going to specific price levels, which what I call is a PD array. PD array, premium discount array. These are specific elements in price action that repeat over and over again and offer like a reason to anticipate price doing something. Watch the top of this candle here. In here, and in the middle of that is mean threshold. Half of an order block, whether it be a breaker, mitigation block, or just a standard order block, midpoint of that is mean threshold. Any gap or any wick, like this wick down here, half of that is consequent encroachment. So consequent encroachment is the midpoint of a inefficiency and or gap. Very, very sensitive price points in price action. In about 11 minutes, the mood is about to change. I do apologize. I was trying my best to get back to the house. I was doing something with our RV and it prevented me to get back here in time. I wanted to be here 1:45 and give you a little bit of a preamble, but I guess in a way it's better this way. I'll just go right into it. Just shy of mean threshold with this low here. And again, as the market is what it is right now, I'm still favoring, even though we had this movement here and this retracement down, I'm still favoring this area here to be engaged. Do we go up there and reject? I don't know. Do we go up there and blow through it and trade into 4100? I don't know. Which is, again, the reason why I'm telling you, be careful. If you make money on this, please don't tweet to me because I don't care. I'm going to say it's luck in my head, but I won't be rude and say anything to you in a tweet response. So when you watch events like this, it's a wonderful study for liquidity. It's not a test for you to feel like you pass or fail. It's just a case study of observing what price wants to do next and where has it been already. We've had several instances right now. Look at all the lows on this chart here. In the fractal, or the portion of price I'm showing in this chart, look how many times the lows were broken and now we're above them. How many highs have been taken? We've had this high taken here. You've had this high cleared with this one as well. This high has been cleared on this one. So we only had what? One high. This one impulsive price move right here has done all the work of clearing out this, and this. But what did it leave? This. And the high at 40.91 1/4. Which when I look at price like this, in my mind, I'm thinking, okay, the market's providing a reason for traders to trust those levels as what? Resistance. So when it looks like that, to me, it looks like Candyland, where the retail mindset, and let me preface it by saying, I might be wrong, okay? It may never even go up there. It could just completely cascade and go lower. And it's no harm to me. I'm not going to lose anything. I'm not going to be embarrassed because of it, because I'm telling you, I'm not going to push the button here. I don't want to be in this environment. But you want to learn how to read price action from me this year, so I'm going to do this every time we have FOMC. I'm going to be doing it also with non-farm payroll. You're going to have an immersive experience with me this year. But I'm thinking that 40.89 3/4 level, which is this one here, and the 40.91 1/4 level is priming. Okay, and priming is where you more or less coax a certain mindset into being adopted. Okay, it's inducing the idea that this is trustworthy for the purposes of lending resistance. So when a trader with less experience looks at a market like this and they think, wow, the market really bounced down from those levels. So therefore what? I can go short and hopefully make a big move going lower during the FOMC. And I can feel safe that my stock could be placed above that 40.91 1/4 level or 40.89 3/4. And then when 2 o'clock comes, they're vanquished. That's what my mindset is right now. That's what I'm seeing. That's what I think. That's what I'm co-signing right now. If I'm wrong, it's irrelevant to me. I don't care. But if I'm right or wrong, it's engaging for you as a student to look at this. And when you get it wrong, should you get it wrong, go in and study what it actually did, and don't think to yourself, oh, I got that wrong. If I would have done this with money, I would have made this much or lost this much. That's the worst thing you can do with this type of day. Just like FOMC, it's like a carnival ride. You have no idea what the market's going to do. I have no idea what the market's going to do on this day, which is the number one reason why I want you to believe me when I tell you the best thing you can do is simply wait until 2:45, 2:45, or the last hour of trading. Then the normal routine kicks in, and that's fine. But I don't want to be a mentor that feels like I got to constantly encourage you to get into the marketplace. I'm trying to be the mentor that tells you you do want to cherry pick when you get in again, when you don't want to get in it, because there's a greater degree of risk in a market event day like this than that of any other regular day. Even a high impact news driver, apart from CPI, you can still trade them, and that's fine. But this type of day can rip your face off. And it could be tricky. It could many times give you the impression you got it figured out. Like, for instance, I've already co-signed, and I believe that they're going to run that 40.91 1/4 level. That's what I'm subscribing to in front of all of you. I don't know how many people are watching me right now, but even if there isn't that many, later on you'll see the video because it'll be on my YouTube channel, and I'll either be correct or I'll be not correct. And either way, I don't care. But I want you to understand that one of the best things that could happen right now is for me to be wrong. And then I'll be able to beat my chest and say, that's why I tell you, don't do anything on that day. Because if the coach is himself not able to do it this day, why should you reasonably expect that you're going to be able to come through it without having any harm done to you? So I'm trying to be that kind of mentor. I'm not trying to be the guy that constantly gives you crack to give you a new high. Watch the midpoint of this wick right here, which also lines up with this right here. See if there's any sensitivity there. In other words, does it support price and does it want to go higher after that? About, what is it, 4 minutes? Yeah, 4 more minutes, and then a whole lot of retail traders are going to regret having pushed the button today. And some other traders might be thinking they're way better than they really are if they get lucky. Just a few more minutes, folks. if I were making the market today, I would run it through these highs, take it up to around 4108 to 4112 or thereabouts. Could go to 4115, and then crash it all the way back down into here. That's how I would do it today. I'm not saying that's what's going to happen, but that's what I do when I watch these events. When I don't look at non-farm payroll anymore because it's been really lackluster over the last, I don't know, 8 years or so, maybe almost 10 years. It used to be amazing. It used to have a lot of volatility. But what I'd like to do is when I'm practicing, I think to myself, how could I, if I controlled price, if I had the strings on the marionette puppet that is price, how would I manipulate them, and what would I do to do the most damage? Well, I would obviously look at what has happened here. We've already taken out the sell stops. So there's traders that are caught short right now. They tried to sell short on the breakout. Anyone that's long had trailed stop losses. They're neutralized. But now who's safe so far? Anyone short. They saw this move here thinking it's great. So how do you wreck them? You run it up here deep, clears them all out, keep people caught on side, not on side, but offside buying it, and then rake them across the coals all the way back down here. And then everybody thinks nobody makes money trading. That's the idea I have in my mind. Might never even come close to doing that, but that's the type of thing I like to do. And sometimes it happens like that, and then sometimes it doesn't. But that's the fun of studying it and see how they do it. Because these particular days, I don't have any insight on what game plan they're going to use, which is the reason why I won't push the button. 3 seconds, and then the fireworks. Watch midpoint of this wick. It's still sleeping. There we go. A little bit of movement here now. I'm watching the low on that wick. Do we just go below it by a little bit and then rip it higher? Or do we aggressively go into our buy side imbalance, sell side inefficiency, which is this candle? Nothing here would I've taken any entries on. Now, in my mind, I'm thinking, why would they want to come down here? Well, somebody might be long here. And if it goes above these highs here and goes to like 4,100, they could stand and make a lot of money, right? So if they go down there and knock them out into this imbalance that is highlighted, then rip it all the way back across all this, that would be the maximum damage and still do what I've mentioned moments ago. Maximum carnage, that's what I'm looking at all the time when it's FOMC. Who could be harmed the most? And who's recently profitable? And how could they be taken out of the game? This small gap here, you want to see it go through that aggressively. I think if we get above that one, no, if we get above it and come back down and act as support with it, then it should be violent to take out 40.92. I see it as they're allowing shorts to feel safe. Remember those stops above 40.92 and 40.90, which will be one tick above this one here, and then 3/4 of a tick, three-quarters of a point rather, above this one. So just basically call it 40.92, because if it's going to go to 40.89.75, it's going to rip to 40.92. You see how it just behaved right there? We traded through the gap, this here, open, traded down to the low of it, and now look what it's doing, expanding up. It's interesting, isn't it? It's almost like it's on a leash. Not on this day, though. Now, here's that old fair value gap. See how it's being sensitive to it there? Rewind the video later on when you can watch it. Now, that's unfinished business, okay? Right here. This high and the 40.92 level. That's unfinished business. This came all the way back up here. It's going to rip through them. And there you go there. And then there's the 92. Come on, punch it up there. Come on. feel kind of bad because I really wanted to be wrong today. Now some of you are going to think, oh, I want to trade FOMC. All right, so now look what this is here. We have the low, the high, the lower low. This is a breaker. It can accumulate more longs in this range here. What range specifically? Here to here. Expand that out here. So that's a breaker. There's your 92. Cherry picked. Using delayed data that everybody's seeing all around the world at the same time. Now, does it rip up to 4108? Or first of all, 4100? A lot of jaws are being dropped right now, aren't they? We have a whole year, folks. A whole year, Mr. Wizard. So right now, you want to screenshot this because it went to 4100. That's a nice run down off of fair value gap I outlined right here, real time. As it hit it, you watched it. I mentioned that we would see this area here act as support. Open, traded down to low, it expanded through. I wanted to see at least one down close candle in here, but it didn't offer it, so it's in a hurry to get somewhere. So I think 4108 and 4112 is doable, but right now, if you were asking me if this was any other day and I was in it trading it, I'd have just about everything off the position and a stop loss that would be extremely tight, which would be anywhere between 40.89 even to 40.88. And if it went down there, I'd be content and not want to go back in for any other thing. Looking for it to rip to 4108, 4112. And if it were to do that, I would close my charts and feel like I've done enough, vanquished enough, adversaries in retail on the altar of speculation. Pretty fun, isn't it? No bull flags, no trend lines, nothing supply and demand, and no buying and selling pressure. All price action. Almost to that 4108. Come on, I gotta at least fail somewhere today, right? 4108, let's not get to that. For the folks on Twitter, holler back at me if you watched this live. Try and get a feel for that delay here. There we go. Even when I'm expecting to fail, I can call it. It didn't get to 4108. So the high on this move here is 4106. And watch the candle's wick midpoint right here, consequent encroachment. You want to see price stay above that. Well, there's the 4108. So even when I try to be wrong, I can't be wrong. Good grief. 4112, bang. That's it. You're done. It's over. Okay? You've watched me do it. You watched it live. This is what we're going to be doing 2 times a week. Okay? Now, did you see me push a button? No. Did I outline everything, explain what it should do, what it shouldn't do? Yes. That's the part of this mentoring that you're not getting because you don't watch price action yourself. So watching it, having someone hopefully communicate it in a way where you can understand it, follow along without pushing the button. Okay? If you've followed this and you're long, get out of the trade. Okay? Just get out of the trade and be content. Don't tell me about it. Don't show me what you made. I don't want to know about it. Okay? Put 4115 and 4125 as horizontal lines on your chart. And I think that would be pretty much the extent of it today. It may not even go that far, but I see that as a potential still. But you saw my target, 4112, 4108, and the narrative off the fair value gap I cherry picked for you. And there you go. So that's going to be it for me. Hopefully you guys have had a worthwhile engagement with me. And hopefully nobody was too terribly confused. But the more you spend time with me this year when we do it live, you'll see things repeat. You'll see the ebb and flow about what the market's likely to do next, where it shouldn't go, why should it go somewhere. And I didn't do a whole lot of jawboning, I don't think. Usually I can be very animated with the word salad, but today I tried to just only talk when it was important. So that's going to be it. Hopefully you found it helpful. And if you did, just give me some feedback on Twitter. If you didn't find it helpful, keep it to yourself. Until next time, be safe.